Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Tuesday, June 1st, 2010. This morning, coming off the long weekend, I think we're going to be a little bit longer than the usual 4 minutes. Lots happened over the weekend, so let's just dive right in. Basically, the euro is lowered today. There's a lot of stuff going on there, including their fundamental data, and there's also news that the German president unexpectedly quit. That was sort of a shock. That's leading to uncertainty. And in the earlier sessions, the euro was down. It tested lows versus the dollar at 121.1. We'll take a look at that in a second. But also over the weekend in Australia, the RBA declined to further tighten interest rates, leaving them steady at 4.5%, citing potential slowdown in Europe as well as China. It's giving them pause. And I just want to take a quick peek here at the 4-hour chart of Aussie USD. If you're somebody who likes to use Fibonacci retracements, take a quick peek here. See the move down that happened with risk aversion last week. Okay, bounced off the bottom, came back up, hit that 38.2 retracement level, couldn't breach it, and boom, came back down. So, we could see that act as a little bit of resistance there at about 85. I've got 85.6, say 85.65 for sake of argument, and that's something that we're looking at here. Some other news coming out. We've got pound. Pound is higher. Let's take a quick peek here. Let's make this a little bit more legible. See the pound's higher. Home prices came in at their highest levels in nearly 3 years. All right, and also UK PMI figures came in showing that manufacturing expanded to its highest level in over 15 years. So that's a good sign for the UK economy. We see money leaving the euro with all the uncertainty there, and it's sort of going over right to the pound. And some other news: Canada. All right, Canada raised their interest rates 25 basis points to 0.5%. We're just taking a look here at the 5-minute chart. You can see what happened right at 9 o'clock. Okay. It looks like the market was most definitely expecting this hike to occur, and as I mentioned last week, now would be a really good time for Canada to slip in an additional rate hike if they needed to, because of recent loonie weakness due to risk aversion. Well, apparently the market was in the same train of thought I was in, and it looked like that 25 basis point hike wasn't enough, so it sent the loonie a little bit lower versus the dollar. Although we are seeing a little bit of a rebound here for the loonie, perhaps it's going to come back as the risk themes in the market abate. Now, this is a familiar pattern that we've been seeing. Basically, what happens is overnight, news in the Asian session and in the Eurozone, there's a lot of fear going on. Oh my God, what's happening? You've got this German president quitting. All right, you had retail sales in Germany, which were lower, although their unemployment figures came in a little bit better. So, it looks like things may turn around in Germany. However, the rest of the Eurozone, unemployment actually was higher. So it kind of shows you the disparity there about what's going on. But that's one of the things that we can take a look at here. You can just see how let's look here at the 4-hour chart. You can just see how the euro just got a little bit lower than where it was when it hit its earlier lows on May 18th. So it looks like we may trade in this range a little bit, but you can see that the trend is clearly down. Let's look at this on the daily real quick. Let's go back to 3 months. So you can sort of see what's happening here. We may see a little bit of sideways. We could see some lower depending upon what happens. But, that's sort of what's happening with the euro. So, the economic data, it's not great in the Eurozone, but as long as, they can keep this bank and debt problem under control, then that could take some of the fear out of the market, and we could revert back to just looking at the fundamentals. I just want to show you one other quick thing here. Dollar yen, we're looking at the daily chart here. Let's go to the 15-minute chart. All right, just see real quick here. I talked about this fat finger move in the yen. Basically what happened is we call it a fat finger move when some trader hits the wrong button and he sends a large order into the Nikkei, which is what happened here. So that sent the Nikkei lower. Now the yen trades inversely, or somewhat inversely, to the Nikkei. So when the Nikkei went lower, the yen went higher. Okay, and you can see right there that little move right there. That was the fat finger, but they came out and said, okay, that's what happened. It was a fat finger. The Nikkei rebounded a little bit, and it looks like some of the other markets are as well. So we could see that there was a lot more dollar strength earlier, but it looks like it's coming in a little bit as risk taking picks up. And that's usually what happens when you have these long weekends. All right, you've got the U.S. stock markets closed, so if people wanted to sell, they wouldn't be able to. So there's always fear over a long weekend that happens. We saw the selling on Friday. Now you had the problems in the Eurozone. Now everybody wakes up in the United States and says, okay, wait a second, we're all in one piece. Everything's all right. Our economy looks pretty good. The Canadian economy looks pretty good. And even though there's still risk aversion in the market weighing down these commodity currencies, things may be okay. So, we averted a panic basically this weekend, because what happens is, say something very bad happened. Well, now you've got euro selling, you've got dollar strength, which pushes U.S. futures indexes lower. All right, if the stock market opens lower, that could trigger stops that people have placed, thereby sending the market even lower. And you can see how this domino effect can happen. So that didn't happen, luckily. Which is a good thing, but there's always that fear going into these long weekends, and I talked about that last weekend. So, the summer session's starting to pick up. We're coming into it. Usually, summer session's a slower time, but I'm thinking that this year it might be a little bit different. We could see some continued activity, some volatility, as there's a lot of fear in the market, a lot of risk aversion going on, and it's all pretty much related to this euro debt crisis, as well as Chinese slowdown. So we'll have to see what happens. Keep an eye on the fundamentals, but expect volatility to remain high, and you know what, as Forex market traders, that's exactly what we want. So that's what we've got today. Welcome back from the weekend, and good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.